Hi there. Good morning, Karen. Thanks for having me. Well, we believe that recent market volatility is really a result of the fact that from here on, we're likely going to have a wide range of potential kind of macro outcome given the unprecedented nature of the environment that we're in right now, which is why market focus jumps from one narrative to the next very, very quickly. And at the same time, we are in an environment where liquidity may not be as supportive in that market could overreact to a specific narrative, which is why it's even more important that we have a firm macro anchor in navigating market volatility. And if you think about the fundamental drivers of our current pro-risk view, which is number one, growth is, in terms of the restart, is broadening out, and virus dynamics represent a delay, not a derailment of the restart story, which is very, very important to have. And then number two, the broadly supportive policy environment is still intact and real rates still deeply, deeply negative. And the combination of the two, i.e. above trend growth dynamics and still very negative real rate, is why we stay pro-risk. And even as we see bouts of market volatility, we reiterate our pro-risk view.
I'm hearing you on the multiple narratives, and we've even seen it this morning with the earnings season. Some inflation coming through in the numbers, big bounce back in revenues for other businesses, challenges for other big sectors still. But in addition to that, we've got some central bank policy, and we've had the ECB conducting a strategic review. Hot off the heels of that, we have a meeting later on. Are you expecting anything market moving from the ECB today?
Well, the ECB has announced their new policy framework, and we are going to see today how persistent and how forceful they want to be, right? And if you think about the fact that what we can realistically expect today, we're not really talking about change in monetary policy, but rather any language change in terms of the forward guidance on rate path, as well as any color, if any, asset purchase will be closely monitored, and also the Q&A later will be scrutinized more than usual. But ultimately, we're talking about an ECB that has changed policy framework, and there can be potential for a dovish surprise given the fact that to change the strategy, to agree on the strategy framework, it takes unanimity. But to make policy decisions, we're really talking about majority. So there is some room for dovish surprise, even though they have already been doing a lot.